Hey, welcome in. You're listening to the daily version of the Korelin Economics Report. I'm Al Korelin. Appreciate you joining me. Interesting times, to say the least. This particular audio is being produced exclusively for my friends at Kitco. I have James Turk, the Dean of the Gold Analysts, with me right now. James is going to opine a little bit on what's going on in the gold market and why we both feel that what we're seeing right now is just a temporary hiccup. James, as we're recording, gold is on the bid side. It's about 1780. In light of what's going on in Europe and in light of the dismal situation in the United States, and I don't want to elaborate on those two issues right now, but I got to tell you, my friend, I don't see any way that gold can maintain at this price level. It has to go up.
Yeah, that's the way it looks to me too, Al. You know, gold is a tangible asset. It doesn't have counterparty risk. It doesn't default. And with everybody looking at defaults and potential defaults at banks and governments all around the world, it seems to me that gold is the go-to asset. And, you know, last week we were at a record high. This week we're just testing support at 1,800. I think this is really a good time to continue accumulating the metal, which, as you know, we've been discussing this for years, just that ongoing steady accumulation.
Well, the one comment that I would have is, you know, you're over in Europe, and when we were talking off the air, you were saying that you've got really kind of a bank run of sorts going on over there. I mean, Bloomberg came out with that news earlier this week, but that appears to be going on kind of around the continent, and I believe in the UK also. Am I correct?
Yes, you are. You know, even in Germany, which is, you know, considered the economic powerhouse of Europe, money's coming out of the German banks. And the reason is that all of the banks in Europe are just stuffed to the gills with this sovereign debt, which everybody knows is going to be defaulted upon, either an outright default or through currency debasement. And the way the European Central Bank has been accumulating this, one has to question the solvency of the European Central Bank itself.
I would agree 100%. I find it interesting that we are starting to get some of the major players in the institutions, in the financial institutions over there, jumping ship. Putting it rather crudely, but you know they are resigning for personal reasons. One guy in particular, 3 years before his term was up. I mean, you know, there's something going on.
Yeah, there really is. But don't get fooled in thinking that the dollar is a safe haven and a way to avoid the euro, because the dollar has its own problems. All the euro has done is taken attention off the dollar for a little bit, but the dollar is definitely not a safe haven.
I do not believe that I have ever said that the dollar was a safe haven. I got to tell you, I think the only place to be right now is in gold or silver, and I think that those two, those two forms of savings, for lack of better terms, security, I guess, is even a better word. I think it's the only place right now where we can have any modicum of security. Would you agree or disagree?
Yeah, I agree completely with you, Al. That's the way I see it as well.
Okay, you've been listening to James Turk and myself on this Kitco audio. We think things are looking good. We're going to be back with you tomorrow.